In today's presentation, I'm going to combine the Golden Cross strategy with the mean reversion strategy and use leverage as well to boost returns. So what the Golden Cross strategy is, very basically, is if the 50-day moving average is above the 200-day, then you want to buy a stock. And if it's below the 200-day, then you want to sell. And with that basic strategy, I'm going to combine this one, which is a mean reversion strategy. I call it the dip buyer. So here what the rule is if the close of the NASDAQ 100 is below the prior day, then you want to buy. And if the close of the NASDAQ is above the prior day's close, then you sell. So it's a very simple strategy as well. In this graph, you can see exactly what it's doing. This close here was below the previous day's close, so you buy. Actually, there's another little detail in here. We do lagged executions, but we're just going to show the signal date on this graph. So here you buy, here you sell, and as you go to the right, here you have another close which was below the previous close, and so you buy. And you can only get out of it once the close is greater than the previous day's close. So this is the situation here. Here's an exit signal. The actual strategy I'm going to apply is you don't exit here, but you exit on the next day close. So there's a 1-day lag for entries and exits on this, as well as the Golden Cross actually. So I used a software called RealTest to do the backtesting. So here is the Golden Cross strategy's equity curve. The green line is the equity curve of Golden Cross, and the red line is the just the buy and hold cumulative performance of the NASDAQ 100. And you can see that the annualized return going from 1990 to present day 2024 is an annualized return of 15.3% with a maximum drawdown of 36. On the right is the dip buyer strategy. For such a simple rule, it's amazingly good on the NASDAQ. It doesn't quite beat the buy and hold benchmark performance-wise, but it is, I would say, smoother, and it has an annualized return of 12.3%. And here's the combination of the two systems. So it's 50% Golden Cross and 50% dip buyer. And you can see that the Sharpe ratio is 0.84, which is higher than either one of the systems by themselves. Next, I'm going to go into the RealTest software so I can just show you what I did in terms of coding up this little system. So this is the software called RealTest. It's a very good backtesting platform, and I use it quite a bit in all my research. So here I already have the Golden Cross strategy coded up, and you can see the entry and exit rules. So if the shorter term moving average is higher than the longer term, you go long, otherwise you exit. So let's go ahead and run test. Press test to run it. And here you see the equity curve. The green line is the equity curve of the Golden Cross system, and the red one is the NASDAQ buy and hold. And if we do a report on it, you can see the various statistics. So the rate of return over that time frame since 1990 was 15.3% for the strategy, and the benchmark was 13.75. And this is the yearly returns. And here's the underwater graph. The red one is buy and hold, and green is the system. Now let's go ahead and code in the dip buyer. So do copy and paste, call it dip buyer. So the dip buyer entry rule says that the close needs to be below the close 1 day ago. And to exit, the close has to be greater than the close 1 day ago. And we'll put a new strategy here. Dip buyer. And let's comment out golden cross for a minute. We'll put in the entry condition here, dip buyer, exit condition. All right, so we have it coded there. Now let's hit test. And this is what the dip buyer looks like, the green curve. And let's click on the report. So we can see here that the rate of return is 12.3 for the system. And it's got pretty good drawdown control as well, compared to buy and hold anyways. All right, now let's go ahead and combine the two. And you can see how it becomes a lot smoother. So we'll give each system a 50% allocation. It says quantity. Run test. And you can see the blue line is well, let's hide some of the systems here. Let's hide the golden cross and dip buyer. We just want the combined and the benchmark. So the blue line is the 50-50 of dip buyer and golden cross. And the gray line is the index, NASDAQ 100. And let's run a report on that, on the combo. So you can see some of the correlations here. Golden cross and dip buyer are 53% correlated. And so yeah, it's an overall much more controlled underwater graph. So what would happen if we use leverage with these two systems? What we're going to look at is when the sum of the two signals of the two systems is 2, you want to buy a 2x levered ETF. But if only one of them is showing a +1 signal, then you want to buy a 1x leveraged ETF. So for example, if let's see here on 7/10/2024, the golden cross system was showing a signal of 1. So the 50-day average was greater than the 200-day. And the dip buying system was showing a signal of 0, meaning the close was above the previous day's close. So you just add them up and the total signal is 1. So in this case, you would be buying a 1x leveraged ETF, which is simply the QQQ. But on the next day, on July 11th, both systems have a long signal. So the addition of those is equal to 2. So on that day, you'd buy a 2x leveraged ETF, which is the ticker symbol QLD. So if you do that, then you get an annualized return of 25% with a Sharpe of 0.9, which is pretty remarkable given that they're both pretty simple systems. And I've actually created a spreadsheet for users to download on my website. It's at this URL right here. I'm going to put that same URL in the description box below if you want to go ahead to my site and download it. So in conclusion, we improved upon the basic golden cross system by adding a mean reversion system. We boosted the return by adding leverage capability, where you buy a 1x ETF as one system if one system is triggered, and you buy a 2x ETF if both systems are triggered. And so the return is 25% on a long-term backtest with a Sharpe of 0.9. And again, if you want to download my spreadsheet, you can go to my website at this URL listed below. Thank you for watching.